We bought a bank. No, we're not opening a bank. We bought an old bank building, and unfortunately we're gonna be tearing the building down as part of our design of what we're proposing to put here. We wanted to try to save the existing structure, and unfortunately, we just couldn't make it work with what we wanna put here. We're actually going to be building a 30-unit apartment building here. It's gonna be 5/1 construction, so first floor is gonna be steel, and then there's gonna be 5 stories of wood framing above, common roof deck with a grill, outdoor space. We're gonna have 31 bedroom units here. We wanna have a boutique style feel to the building. If everyone has any name recommendations for the building, definitely let me know in the comments below. But we want to kind of have that cool boutique-y feel. We're gonna have a really nice package room with refrigerators in the lobby. There are gonna be 2 commercial spaces on the ground floor. We're right downtown Lynn, so we're really excited. This is gonna be our largest project so far that we've done. So it's definitely a big step up for us, but we're super excited to kind of move in the direction or the vision that Ray and I talked about a year or so ago in the middle of COVID, where we want to head and what our long-term strategy is. So that being said, you know, we really, really love multifamily real estate, and that's kind of the segue to the topic of this conversation, or the topic of this video, why we love multifamily real estate and our top 5 reasons as to why we love it. But before we jump into those, make sure you like, subscribe, comment below, let us know what you think, hit the bell notification thing. So reason number 1 why we love multifamily real estate is cash flow. We value cash flow as probably the most important reason as to why we're doing this. We want to have that recurring monthly revenue coming in. It's basically replaces our salary. It's our monthly income. It pays the bills. It puts food on the table for our families. It's the reason why we do this. So having that monthly cash flow is super important. And by leveraging and investing in multifamily real estate, it allows you to have that monthly cash flow and not have to work an extremely busy 80-hour work week to be collecting those checks every month. Cash flow is very important when it comes to multifamily real estate. All underwriting lenders will lend based on cash flow, based on debt coverage ratio, based on your debt to income ratios. There's so many factors, but at the end of the day, cash flow is king for us. Obviously, it's important to make sure that you underwrite the deal correctly so you can obtain that cash flow. And I actually will link to a video we did above on how to underwrite a deal or how to run the numbers on a rental property. So check out that video by clicking the link I put above here. But at the end of the day, we really like value add opportunities. So for instance, here, we're gonna be taking the building down. It's an old commercial building. We're gonna be doing a tremendous value add by completely rebuilding a new structure from the ground up, building 30 apartments. And so that will significantly add value to the site. We always try to find a value add opportunity whenever we're investing, because by adding that value, it significantly increases your cash flow. It can significantly increase the value you have in the building and the amount of money that you could potentially leverage to pull out of that property to reinvest in more multifamily real estate. So that being said, let's talk about topic number 2. So reason number 2 why we love multifamily real estate is leverage. Leverage allows you to do a number of things when it comes to real estate. The biggest is scalability. You can leverage existing assets or use investors to scale your real estate portfolio. So if you have a ton of equity by adding a ton of value to an asset, you can leverage the value that you've added by borrowing against that asset and purchasing additional real estate, which allows you to scale, it allows you to increase your cash flow, it allows you to build your overall net worth. By bringing in investors, you can also scale and also leverage investors to build your real estate portfolio. You can use investors to help fund the acquisition, and then at some point when you add that value, doing a refinance, pulling some money out and paying them off. You can bring investors in as equity partners, which will kind of stay with you for the life of the asset until you sell it. I actually did a video on how to find money to invest in real estate, and I'll link that above as well. But leverage is a huge way you can quickly build your real estate portfolio and your multifamily portfolio. Reason number 3 why we love multifamily real estate is stability. Multifamily apartment rentals are inherently less risky than, say, a condo play or a for sale opportunity. Reason is it's a stable asset, you have cash flow coming in versus you have an empty building that you need to sell. So banks or lenders typically like multifamily apartment real estate versus a for sale development. Obviously, there's a lot of for sale development that goes on too, but overall, you can get better terms and you can raise money from investors at cheaper rates when buying or investing in multifamily apartment rentals. In addition, everyone needs a place to live. So in a market like we're in today, where we have high inflation, rates are going up, and with that, less people can afford to borrow to buy, those people are all gonna rent. And the more people that rent, the higher the rents are gonna go. So typically in a market that we're in now, or a down market, doesn't necessarily impact multifamily rental as much as it would impact a for sale type development or project. That being said, in a down market, I don't usually typically care how much the building is worth. I care about the cash flow, and I care about keeping tenants in the building and keeping my vacancy low. Obviously, I care about value when I'm doing one of two things. I'm either selling the building or I'm doing a refinance to pull money out, or a general refinance to reevaluate or reset my interest rate for some reason if the rate goes down, or if I want to have reintroduce an interest-only period. But overall, I really only care about the value of my asset when I'm doing one of those two things. And overall, if you look back at a lot of the market cycles, even in down markets, multifamily residential real estate typically does not suffer as much as other segments of the industry. Reason number 4 why we love multifamily real estate: tax benefits. There are a number of tax benefits when investing in multifamily real estate. I would say preface this by consult a CPA if you have any questions or any details regarding your specific investments. But overall, there's a lot of different options when you are investing in multifamily when it comes to tax benefits. I'd say the first is on the financing side of things. There are so many flexible financing options when it comes to multifamily real estate. You can get creative and you can, like I said earlier, leverage other assets. You can get portfolio loans. You can get interest-only periods when it comes to multifamily residential real estate, which helps your cash flow for a few years before it switches over to principal and interest. So overall, there are a number of ways you can leverage financing with multifamily real estate. The second, which a ton of people use, are 1031 exchanges. You can sell an asset and buy another asset using the gains from that particular asset and not have to pay taxes. So you're deferring the gains by funneling it through a 1031 intermediary and buying a larger asset. So it gives you the ability to trade up over time. You do have to buy something that has a larger basis, so you can't just trade down and pocket the cash. You actually have to trade up or increase the overall loan size. So for instance, if I sell a 3-unit building and I have a loan of $1 million, and I'm going to buy an 8-unit building, the loan has to be more than $1 million in order for that to work. I can't go and buy a building that has an $800,000 loan and then take the $200,000 and pocket that. That's not the way it works, but it allows you to trade up. So if you are increasing value and say you have that 3-unit building for 5 years and it increases in value significantly, you can sell it, take all the gains tax-free, move it into a much larger asset, which is worth way more and has way better cash flow. The other cool aspect of multifamily real estate and tax benefits is depreciation. There's all different types of depreciation you can do when it comes to multifamily. You can do cost segregation studies, you can depreciate certain assets, or when you're doing capital improvements, you can depreciate certain aspects of the capital improvement either immediately over the course of a certain amount of time. Again, consult a CPA, but there are ways that you can offset your income by depreciating certain aspects of that piece of property. Another tax benefit is cash out refinances. And this is typical in a lot of other asset classes, but specifically in multifamily, you can leverage the value that you've created, refinance, add more debt, and pull that money out. And the cool thing is because you're adding just debt, it's not considered income. You don't have to pay taxes on that gain. So there's a reason why real estate investors don't show a huge amount of money they make every year on their tax returns, because they're leveraging the existing assets they have, doing cash out refis, pulling that money out tax-free, and then using that money to buy new assets or using that money to live. And I touched upon it earlier when it came to interest-only periods, but having interest-only for 2, 3, even up to 5 years on some of these larger multifamily buildings allows you to significantly increase your cash flow for the first few years that you own an asset. So what I mean by that is when you get a new loan, say the first 5 years are interest only. So you're only making interest payments on that loan for the first 5 years. Yes, you're not paying down any principal, but a principal payment covers a huge portion of your typical monthly payment. So if you're looking at your monthly mortgage statement, you can see how much is going towards interest and how much is going towards your principal. But imagine not having to pay any of that towards principal and you're only paying that interest portion. Your cash flow significantly increases over the course of the first 5 years. That could either help you amass money to buy another asset, amass money to pay down your investors. There's so many it gives you so much flexibility to use that increased cash flow to buy other assets, to do so much creativity from a tax perspective. So the fifth and final reason why we love multifamily real estate is long-term generational wealth. We're all moving towards the same goal in terms of where we want to be in 10, 20, 30 years. But at the end of the day, I want my kids, my grandkids, my great-grandkids to be set. I want to build long-term generational wealth by investing in multifamily real estate. You really can't do that by doing flips or doing condo development. You get hosed with taxes. You're always chasing the next deal, the next opportunity. I feel like you're always on a hamster wheel. With multifamily real estate, you can really change the game when it comes to long-term generational wealth. These types of assets that we're building here, this 30-unit building that we're going to be doing, is a generational asset. It's a type of asset that gets passed down from generation to generation. A smaller asset like a single family or a 2-family, yes, you can potentially pass it down, but these types of assets will grow so much faster from a value standpoint and from a overall net worth standpoint that this is where we want to be, this is the space we want to grow into, and this is our ultimate vision. So should you invest in multifamily real estate? I think it depends. I think that a good way to start is probably by house hacking. That's how I started. I bought a 3-unit building. I lived in 1 unit. I rented the other 2 out. It's a great way to get into multifamily investing, to learn how much things cost to renovate, to be a landlord, to learn that whole process, to learn how to manage the asset in general, and then expand from there. House hacking is a great way to get into multifamily investing. The other thing I want to mention is multifamily investing, it's a long game. You're not going to get rich quick overnight. It takes time. It takes time to build the assets. It takes time to add the value. I would say you want to give yourself 10, 20, 30 years, but you want to stay consistent. Keep building over time, and eventually it will pay off in waves. The other thing you need to do is you need to put in the work. It doesn't come easy. Nothing is easy. If it was that easy, everyone would be doing it, right? So you want to put in the work now while you are young, while you have time, while you have the opportunity to build those assets and that growth and leverage your assets and grow your portfolio. You can do it quickly, but at the same time, it takes a lot of work. And finally, just get out of your comfort zone. I know it's not easy, but if you're not uncomfortable doing something, it means you're not growing. Are we uncomfortable doing these 30 units here? Hell yeah, I'm super uncomfortable doing some of the things that we're doing, and Ray's even more uncomfortable doing some of the things that we're doing. But at the end of the day, we're growing, we're achieving our long-term goals and our long-term vision, and we're getting out of our comfort zone. So if you're not getting out of your comfort zone, then you're ultimately not gonna grow. So with that being said, I would say get out there, start investing, start somewhere. If you have any questions, definitely let us know in the comments. Like, subscribe, hit the bell notification, and we'll see you on the next video. Whoops.
One more time.